Welcome back, everyone. My name is Michael LeBlanc, and here's our weekly live financial overview where we're going to take a look at June and see how it's winding up, and also what we're heading into July with. So thanks, everyone, for joining us. Uh, as always, the information here, we do recommend you always get your own advice or contact us for a personal review of your finances. What we cover here today is for information purposes only, not meant to be advice or used on its own, or do your own due diligence. And also, we do try to keep the information as up to date as possible, but as always, things are constantly changing. So make sure you take a look at that. As mentioned, I'm Michael LeBlanc, Director and Senior Portfolio Manager here at Canaccord Genuity Wealth Management, and let's dive into things. So as always, if you want to ask questions, you do have a little Q&A button on there. You can just type something in. We'll address those at the end if we have time, but you can always email us or phone us if you're watching this on a recorded format afterwards or at your leisure. Again, reach out. We're always happy to hear your questions. Anything to do, whether it's in your current portfolio with us, or if you have a portfolio outside, or even if you just want an opinion on what's going on out there, feel free to reach out. Also, if any questions or you'd like to see anything different in these weekly updates, do that as well. Let us know. We do deep dives every Friday into topics, usually driven by feedback we get from here. So do let us know if there's anything you'd like to see more information on, and we'll make sure we get that out on our Friday videos. And you can find all that on our YouTube channel, and you can access that at our website, mikeonmoney.com. So let's go into things. So what have we seen in for June and last week, and what we have coming up here? So what we're watching for this week is the Canadian GDP numbers. Actually, those came out. It's actually funny, the last few days we've seen so much information change. I start working on these presentations on Friday, and then try to update them on Monday, and we've got new information out. So bear with me as I will correct a few of the points on the information in here today, as information has changed in some areas. Canadian GDP numbers we were waiting for in April, and they have come out. The Canadian GDP fell roughly 13%. Sounds bad, and it is kind of in line. The expectations were around 14% drop, so a little bit better than expected, but still a significant drop for the Canadian gross domestic product. And we're also looking into the U.S., seeing the home price index come out from down there this week, and we're going to have Mnuchin and the Fed Board Reserve Chair Jeremy Powell testify in the committee, the House Financial Services Committee, although we're not expecting too much surprise from that testimony. On the coronavirus update, surprise, surprise, the U.S. Fed is seeing that they might face some new challenges with the virus. Obviously, if you've been following the news, it's been not a successful curve flattening in the U.S. In fact, all indications are it's not even a second wave, it's the first wave continuing, as there was no real significant dip in the rate of infection, and that continues. So they're actually calling for some uncertain times ahead in the U.S. economy, and we're certainly seeing that in certain states like Florida. I believe New York, Texas, and Arizona have now, and LA, or California rather, have all announced that they're slowing down reopening or reclosing some of the things that have opened. So kind of a misstep in the reopening down there. And we haven't seen the end of that, as some states continue to stay open and continue to have some challenges. So as always, as we have from the beginning of this, we are watching the U.S. very closely. And there's a lot of concerns around that and how they're going to handle whether it's going to be a full closure. Obviously, the federal government's not in favor of that, or certainly hasn't been in favor of that up to this point. Whether they change their outlook, we'll have to see. But it's proven to be a lot more problematic than they first thought. And we're even seeing countries around the world react to that, as if you followed, Europe is starting to reopen their borders to visitors. But most of the European countries, I believe there's 14 countries they're looking at reopening, to Canada being one of those. But the US is still barred from traveling to Europe for tourism. So, the effects of their worsening virus numbers is having a global impact. Some good news: China's economic recovery has been picking up momentum. If you remember, we've been following China very closely, as they were one of the first countries to start to reopen. They had some stalls in that economic reopening, some struggles in the first few months. They saw the surge that we've been talking about, that pent-up demand, but then things fell off again after that, or slowed a bit after that. And of course, they had another outbreak in Beijing where they jumped on very quickly. So things are looking a bit better there again, starting to pick up momentum. Now, when we say pick up momentum, that certainly doesn't mean back to where things were before, but it is a positive trends that we're seeing there. So, very optimistic on what the picture for the rest of the world might look like as they follow suit behind them. As I mentioned, in the US, the regional coronavirus surges is forcing state by state, city by city to change their reopening plans, and we'll probably see that continue. And on that same line, Las Vegas workers are looking to sue over their safety around the virus and the measures that have been put in place. And not surprising seeing, if you remember back then, so many things have happened. It's hard to remember everything that's happened through this. But if you remember, the Las Vegas mayor was pretty cavalier about the reopening and had a lot of backlash around that. But the workers are not feeling safe. And that's something to keep in mind, whether we're talking about the US or Canada or anywhere in the world. As we do go back, it's not just the people attending, going into the stores, or, we'll touch a little bit today on movie theaters. They're looking at reopening. It's not just people that are going to be going to these places, but also the staff that are there, and obviously harder for them to social distance, or harder for them to avoid surfaces as things begin to open more and more. And we're seeing that, of course, everywhere, and certainly here in BC. The announcement that the pools are going to be reopening here in July, which I'll just be happy if we have a few more sunny days. I'll probably avoid the pools though. So what else are we seeing out there? Vaccine makers face a big challenge, of course, trying to develop this vaccine in record time. But not only that, is producing it and getting it out there. So a lot of discussions now are turning around to what if we have a medication? What if we have a vaccine? How is it going to be produced in the quantities needed? But also, how is it going to get out? And obviously, it's very likely going to be some sort of priority for the vaccine, for who gets it first, and what that's going to look like, and how that is enforced or run as we're still taking steps in search of that vaccine. We've seen this before when the first flu vaccines came out. If you remember, in the early years, it was for, I believe, over 60 were prioritized, and kids under, I want to say 5 or 6 were prioritized, and then whatever was left over, people in between could go look at it. Today, of course, now the vaccine is widely produced, and pretty much anyone can go out and get a flu vaccine that wants to. But as this new vaccine comes out, obviously there is going to be production issues, there's going to be rollout issues, so we'll keep a very close eye on that as more and more drug manufacturers are getting closer to potentially have some sort of vaccine, because of course there's still a lot of science that is missing behind this virus, especially around the antibodies, how long they last, whether whether a vaccine would cover you for all strains, et cetera, et cetera. So a lot of changes in news coming along in that area. day to day. I mean, we've even seen some people who had the virus, had the antibodies, but were reinfected within 3 months. So, obviously not good news around the antibody or the herd immunity strategy. We're even seeing in the financial industry, we've talked a lot in the last few months. I keep on saying the last couple of weeks, but it's been months now, hasn't it? So we've talked a lot in the last few months about the M&A, so mergers and acquisitions through this. So this is companies that have been struggling or being bought up by larger companies. And very common in a recession, very common in an economic slowdown for that to happen. But we're seeing a lot of competition in that, especially on the banking side, the commercial banking side. Canaccord would participate in this, not in my side of the divisions, but on our banking divisions. There's a lot of demand, but a lot of firms vying for that business. And it's causing some strife, especially with the younger juniors who come in hoping to learn and grow, as there's only so much business to go around. So that's going to continue on the banking side, and we'll see as the bank numbers come out from the major Canadian banks who all participate in that market. It's certainly interesting because the bank stock prices have lagged through this recovery so far. This month has been fairly strong for the banks in June, but that's the first big surge we've seen on the bank stocks as the early numbers, they were writing down loan loss provisions, and now on the M&A side is starting to pick up. They're seeing their revenues strengthen. So we have seen that come through in June. As we mentioned, coronavirus resurgence is looming down in the U.S. But the Wall Street rally. So we did see fairly positive markets across the board in June, although not as strong as May. There's a lot of ups and downs in June, and this is the weight of the concern around what's going on in the U.S. With the resurgence of the virus. I believe the last 3 days have been record numbers in infection rates in the U.S. And so as that continues, it's going to put a lot of pressure on the Wall Street rally, which has mostly been driven by the federal assistance out there, the packages that they've put out. So now the economy is trying to take over, and any hiccups in the economy, of course, is going to put pressure on that rally. And also the Wall Street or the markets is very much counting on a second round of stimulus packages from the government. Now that's not to say that they won't come with a second round. There's a lot of talks that they're going to have a second round. There is some pressures. We talked about the pressures from the Republican Senate, who aren't necessarily in favor of a second round, or certainly not as generous of a second round of stimulus. And that's the real big concern there, is if Wall Street or the markets are pricing in a second round as generous as the first one, and even if they get a second round that's not as generous or not as encompassing as the first round, it could put a lot of pressures on this rally, which we certainly, as if you've been following these on a weekly basis, we certainly do expect July and August to be fairly choppy months in the market, as all these what ifs kind of play out. And there are a lot of them, whether it be sector specific, which we're going to talk about here again this week, but even on survival of certain businesses, as we see the real impact of the economic shutdown plays out here. So other things we're seeing out there, as we mentioned, the Fed sees a lot of concerns with the surge in infection rates down in the U.S. We talked about China. The world's second largest economy is starting to see some positive growth going into the second quarter. Very good sign for other economies around the world that have flattened the curve and continue to flatten the curve. Now, that being said, Canada and a lot of countries like Canada, like New Zealand and others that have done well in flattening the curve, reopening will mean more infections. So if you start to see that on the news, that's fully expected. That's not a negative. that's just a simple, reality of the fact that as we reopen, we put more and more people together or around each other. There is going to be more infections. It's really what the response, what the country's responses are. We saw that in China, Beijing. They had a resurgence. They jumped on it right away. They quarantined. They figured out everyone that was had come in contact. They quarantined them. They closed it off and continued reopening. And that's what we want to see in other countries, and that's where we're doing contact tracing in Canada, and we're having a lot of cooperation from people. When they do find that they're infected, they've been very quick to isolate as to where that contact happened, and jump on that and right away deal with it to prevent more spread. So don't be afraid if you see some more the numbers increasing across Canada. It's really what we want to watch is that kind of that strike force, how we deal with it, how we contain it, because it is fully expected for the reopening. What we don't want to see is an uncontrolled spread, like some of the states are seeing again, where the hospitals can't handle it and they're not able to trace where it's coming from. So in Europe, we're also doing the reopen, starting to see inflation pick up. We've talked about this in previous weeks. Whenever you do some big stimulus packages like that, we are expecting inflation. It's something that we're looking at in North America. We're going to talk a little bit gold prices today. As that goes up, that is largely due to the fact that people are expecting inflation. Gold is considered an inflation hedge in your portfolios, so not a surprise there, and we'll probably see that happen globally in most countries, especially the bigger stimulus package areas. And as I mentioned, Las Vegas looking at suing their employees just as cases surge, not just for guests, but for the employees as well. They want to feel safe at work. As I mentioned, moving on to New York, the continued protests in the US and globally, it's certainly not a US. I know Toronto had a big protest on the weekend. We're seeing in Europe. This is around the discrimination and police, specifically focused on police. New York has come out saying they're opposed to defunding the police. This is a very complicated matter. We're going to continue to see and hopefully make progress on. We've got two sides. A lot of misunderstanding, I think, around what the protests and the defund the police movement is all about. And as those two sides come together and hopefully understand it's not about necessarily removing police, but removing certain responsibilities from the police to other areas that might be able to service the communities better and without as much conflict. Not having to step it up to police right away. They might not be needed in certain situations, but this is all going to take a lot of time, and hopefully we're going to see more and more progress being made, because it's not something that can happen overnight. These other support systems have to be built, have to be staffed. Policies of who handles what have to be made. It's all going to take time. The good news is the discussion's happening, and hopefully we see some progress on that front. But this hasn't gone away, and we're watching it very closely, and hopefully seeing progress being made, but also willingness to make progress. And we've certainly seen that in a lot of areas. This is one of the next one, the wave of corporate failure stays at bay. So kind of the bankruptcies or the financial troubles. And it has stayed at bay. I find it funny I put that in, but I am going to talk about all the closures we have seen, and certainly the increase we're starting to see. But they have stayed at bay up through June. And mostly that is through the stimulus. There was a lot of funding of financings and guarantees for companies, which has carried them a bit longer than we probably would have seen in a complete closure scenario. And we're also seeing some of those closures just being delayed by the sense that the companies have shut down. So the amount of money that they're losing has diminished because they're not operating at all, but they have no plans of reopening. They just haven't made official filings yet. And one stat around that I read, I wasn't able to confirm it, so I didn't create a slide prior to today's event, but Yelp, if you're familiar with Yelp, which is a review app that people review retail or restaurants or companies that they deal with. They had 140,000 North American listings on there, and so far 53% have declared they're not coming back. So there's a really big number of companies that aren't looking to reopen. Now, most of those might be smaller, but still a significant number. So we probably will see some more along that line, and we're going to talk more about that today, as we have seen some changes here through June. The Fed opens up their London program to new issuance of corporate debt. And this is the extension that we've seen earlier, but through June, we've seen the expansion on corporate debt, new issuance, and the Fed backing that. And that's where we're seeing some companies where through something like this might have challenges in refinancing. Certainly in the 08, 09 crisis, that was a big issue. Even healthy companies not being able to renegotiate debt or access debt during the financial crisis, and that's where the stimulus packages and the governments have stepped in to help in that, and that stemmed a lot of problems around companies' closures and are keeping them going, especially as they reopen here and hopefully trying to shore up revenues. Of course, if you're following the China-Hong Kong scenarios, China has passed the law aimed at stopping the Hong Kong protests. New legislation is a sweeping new law, really looking at closing down the unique freedoms that Hong Kong had as part of the state of China, of course, that had continued on from what was under the UK rule. They've now passed all the new laws that allows them to get rid of those. So another big concern that's probably being buried under this pandemic more than it should. I mean, if you remember going into the coronavirus closures, the protests were massive in Hong Kong. There was a lot of global attention being paid to it and support going to it, and that now has turned a little bit away, certainly from the media's eye as they deal with other issues. So quite a bit of concern. There is still help out there. I know the UK and a couple other countries have actually offered anyone in Hong Kong amnesty if they want to immigrate to the UK. What that's going to look like or how they implement that is still unclear, but they are offering that to their former citizens. So there is still help out there for people in Hong Kong, but it obviously is a very changing time for that city. India and China, of course, if you follow the news there, continued border disputes. We've seen deaths on the border between the two militaries. They have negotiated a ceasefire, or shouldn't say ceasefire. It wasn't a full-out war. It was a skirmish. They have called an end to that. Both sides, don't want any further clashes, but there's still a dispute around that border. And India has taken the steps to ban dozens of Chinese mobile apps within their borders, including TikTok and WeChat, which are things my children tell me that I should not ever have. So I'm just too old, apparently. So those are some things that are happening in between those two countries, and we're probably going to see more development there as the political situation worsens. As always, we like to take a look at what's going on around the world, and we did blow through since last week the global 10 million case mark, almost at 10,500,000, and we went through the 500,000 death mark, about 510,000 as of this morning. The US coming up on 2.7 million infected and almost 130,000 total deaths. As I mentioned, they have hit record daily numbers. I believe it's been the last 3 days. So, which is why we're seeing some of the states initiate closures again as they try to get that under control. We will definitely keep an eye on that going forward. So let's talk a little bit about Wall Street. We saw a treasury yield fall as you knew restrictions come in on businesses, and that coronavirus jump. The dollar inched up, as we've talked about. We've seen movement in the U.S. dollar. Mostly the upward movement is as people get more concerned. It's a flight to safety. U.S. is a global dollar, so we do see money fly into there. And as I mentioned a little bit early, gold prices rose. In fact, today it went through 1,800. So that's a new high water mark since 2011, I think, last time it was there. And that's on inflation concerns. Oil dipped a bit from its highs as we continue to see stockpile of reserves both in the U.S. and globally. And we'll dive a little bit more into that. As we mentioned earlier, coming up in the U.S., we do have some testimony in front of the House of Representatives, although we don't expect too much. It's mostly around the handling of the coronavirus aid and relief. Not a lot we expected to hear out of that. The only thing is potentially a bit of information of what the second round might look like. We're also looking at the consumer, the U.S. reporting on the consumer confidence index. It edged up a little bit, but that was that was mostly in May, and that was on the kind of that surge, that pent up demand as people went back out into the world. But June is where we saw that flattening, which we fully expected to see June flatten a little bit as that pent up demand went through, but also as concerns grew over the number of infections we're seeing down there. If you haven't been following, Gilead, the drug manufacturer in the U.S., and hopefully I'm going to pronounce this right, but remdesivir is a drug that they're looking at as a potential treatment. It's an antiviral potential treatment, not a cure, a treatment. So this would be for those who have already been infected, just to ease the effects of the virus. So far, it's not gone into massive production. That's one of the challenges, of course. Now they've got to get into production, get it out there, and there's a lot of controversy around the price. The research and development of this was mostly paid by the U.S. government. The cost of producing it, I've seen reports around $10 up to $100, and they're selling it on an average around $2,300 per patient. Obviously, a lot of concerns around that. Normally, the justification for the high price of these drugs is the development cost. This one, however, being developed mostly on the U.S. taxpayers' bill. There's a lot of controversy around that. So we'll see how that plays out. Boeing begins a crucial test flights. They got permission to test the 737 MAXs. So these were the planes that had the crashing problem. We saw, it's been so long ago now, three significant crashes with massive loss of life, and they were grounded last year. And they're looking at a fix to the software that was causing those problems. So they'll be doing testing on that in the coming weeks. We mentioned this before. Chesapeake went into bankruptcy protection. So they're looking for court approvals to renegotiate contracts, which is normal steps as they try to deal with millions of, just their one pipeline contract was $300 million. They're trying to cancel and renegotiate as they try to shore up a balance sheet. Nike plans to cut jobs as they push to digital more and more. And we've talked about this. Actually, Nike in the early stages of coronavirus, we were very impressed with how quickly they shifted to an e-commerce platform. And their sales are doing quite well, but more and more as they have to rely on more digital processes and also keeping people further apart. We're going to see this in a lot of industries as companies retool and shift more and more to less human contact to keep people safe, but it also will cost jobs. One of the number one, especially on the manufacturing side, one of the number one areas of job loss in North America for decades now has been automation. and will likely, very likely rather, see a surge in automation in all industries as coronavirus and pandemic measures are put into place to try to keep people further apart and less human contact. So more automation, and we're seeing that in Nike. Canada, we saw the top court in Canada rules in favor of an Uber driver. This is under appeal, but so basically Uber driver is fighting to be classified as an employee, which of course comes with all the benefits that employees would have, vacation pay, et cetera, and sick pay, minimum wage, versus a contract employee where it's kind of piecework. So just based on what they produce. So that's in court. That could change a lot of pricing for a lot of that industry as it goes into an appeal. Coming up in Canada, the producer price fell by 2.3%. Again, these are April numbers. We're still waiting for more current ones, but not surprising. Building permit slumped. We're still seeing a lot in the housing sector on the positive, but new builds or new applications, of course, has slumped on the uncertainty of what it's going to, the economy is going to look like. Not a lot of builders are starting new projects, but finishing off old. And as I mentioned, the gross GDP had dropped 13%. So again, seeing the fallout of the complete shutdown, these are not reflecting kind of the reopening numbers. So nothing in there is overly shocking. We were expecting the other shoe to drop, the effect of the closures, and this is just the numbers coming out. Canada's producers, as mentioned, the building permits may rise in May. As I said, the housing market has stayed fairly strong in Canada. So we are keeping a really close eye on that. But we did see a kind of a drop into April and May. Now we're looking to see if it's going to start up again for the summer. Canada's Alberta, not surprising, Alberta's having to take a very aggressive stance to reignite their economy. They're spending a lot. They're going to spend $10 billion in infrastructure programs. They're going to be cutting corporate tax rates. Really trying to revitalize the economy there after not only were they hit hard going into this, but of course we've seen the big drop on the oil sector and the reduction in production. So Alberta being one of the harder hit provinces in Canada, taking extreme measures there to reignite that. We're seeing some M&A around the gold sector. As we mentioned, a bit of resurgence since 2011. Gold has not really moved in price, and we've seen it go through 1,800 an ounce. US dollars, the first big move since 2011. So we're seeing some M&A there with Kirkland Gold being sued over Detour Gold purchase. So some just back and forth companies arguing and struggling. CN Rail's investing in BC. This is just added new tracks, increasing supply chain. We've always liked CN. It's a core part of the supply chain. It's the only way goods can really move across Canada. So we're glad to see that happen as they continue to grow. On the exchange rate, as you mentioned, the US dollar had a bit of volatility, ended yesterday a bit stronger. It was a bit weaker until last week. And this is the back and forth on the uncertainty of where we're at with the surge in the US infections. The Canadian dollar did drop a little bit. Sorry, I forgot to put it on this slide. The Canadian dollar did drop a little bit from last week. We're sitting about 7.735. And that's just been a little bit on that US strength at the end of the week. Oil overall was fairly flat, a little bit down for the month. We are seeing actually the futures start to weaken again. Keep in mind right now, demand has not increased. What we've seen and we've talked about in previous weeks is that churning off of supply. So as producers cut supply, artificially kind of pushes the price up based on the current level of demand. But there's a lot of countries out there that are part of this agreement that really rely on their oil revenues to keep running. And we've seen them in the last round of cut agreements not live up to their commitments, and very likely we won't see them live up to these ones. So it's really easy to put pressure on the price of oil. And we mentioned it's one sector that we do think is probably going to have some struggles for a while. Gold, we've talked about through today. We are seeing some strength. It is a good hedge against inflation. We are very likely to see continued inflation. We'll still very much looking at some volatility in that gold sector as sentiment moves back and forth on the recovery here, and probably going to be one of the more volatile sectors for July and August. But if you don't have some exposure in your portfolio, you probably should. And it is a good hedge, like I said, on that inflationary number. So what I really want to focus on today in June or kind of what we really saw in June is that reality set in on the impact on the economy. What is this going to be like moving forward for an economy? Because the markets and the economy have very much divested through the last few months, where the market has been mostly working on sentiment, which it generally does always, but it's really working on sentiment around the government stimulus and not on what's happening in the economy. So it was really looking at the governments to bail the economy out completely. We've talked about what normal will look like as we come out of this. I think the phrase coined these days is new normal versus, oops, let me fix my technology here. There we go. What this new normal is going to look like. And I've equated it in some of my conversations with some of you on today, but other people, a little bit like a forest fire, where it burns through, it destroys, but it creates a new. And that's where the economy is going to recover, is this anew. So when we look at kind of what's really happening out there, we are seeing some real damage being done. And I don't want to be negative. This is not, buy a cabin, let's all, move out and live off the land. This is just, there is some damage out there. We have to be aware of it. We have to build that protection in our portfolios and really recognize what that means. So this is a list of U.S. companies that have filed for Chapter 11, or we call it in Canada CCAA, but bankruptcy protection. So this is where you go in and get protection against your creditors. You're able to we talked about Chesapeake, renegotiate with any contracts you have. You can renegotiate with unions and employees, and a couple scenarios can come out of that. One, the company can come back out of there re-strengthened with a cleaner balance sheet, wiped off some debt, better terms with their contracts, and continue to operate. Or sometimes the assets are just sold off in that production in favor of getting cash to the creditors. And the creditors could be banks, lenders, it could be bondholders, it could be employees. Very rarely is it shareholders. If the company does come out of bankruptcy, there's usually a new class of share issued, so the previous shareholders are pretty much wiped out in that process. So when we take a look at what's happening in the U.S., there is some very significant damage out there. We heard about Pier 1 earlier this year. Gyms, there's a lot of them. There's Gold's Gym in the U.S. Here in Canada, especially if you're out in B.C., there was a Steve Nash gym, which had bought not too long ago bought Fitness World, which is a big chain. Went under, and those assets were just bought out, and it's going to come back out under a new name. Chuck E. Cheese. Who would have thought Chuck E. Cheese is going down? Chuck E. Cheese filed for Chapter 11, although I do think that the ball pit was probably the source of the virus. If you've ever visited one of these places, I'm sorry if you haven't visited one of these places, you're not going to be able to going forward. It looks like they will be an asset sale. Doesn't look like they'll come out of that. Just this morning, NPC, which owns Pizza Hut and I think 300. It's one of the largest fast food chains in the United States, with Pizza Hut, Wendy's, and I can't remember off the top of my head. Some other chains in there. They're in the process of filing for Chapter 11. Hertz. I think there's Advantage Car Rental, both filed. Chesapeake, we mentioned in the oil and gas sector. Retail, J. Crew, J.C. Penney, Reitmans. Where are some of the other bigger ones we saw in there? Pier 1 we mentioned. Anyway, there's quite a few, especially on the retail front, on the food front, that consumer discretionary markets, travel market, obviously the bigger impacted industries. The Canadian list I was going to bring up, but there was over 400, and it would have been way too many slides. But there's a lot of Canadian names. But on top of that, the numbers, the other things to really look at is, companies like Rona in Canada shutting down, I think, 200 stores. Macy's in the U.S. letting go of, I think it was 3,900 employees and closing 120 stores. Even Lululemon closing, which has done well through this, because I think probably half the people listening today is wearing Lululemon, as we don't put on suits that much anymore. Is closing a bunch of stores. We're seeing real impact, especially to that retail or that in-person environment. As there's talks of malls, just the existence of malls in general, society moving away from that, or people moving away from malls, going for more of the open air storefront kind of situations. So when we look at all this, and we're really seeing that impact coming out of June, we're just seeing the forefront of this. This is going to continue into July and August. Again, not necessarily negative, but this is that wildfire going through and taking out the damaged areas of the economy. What we really want to be watching for here going into July is what's going to grow out from behind that. We're already seeing a lot in the tech area, but which companies are going to be able to revamp themselves and grow in new ways of doing things? As I mentioned, really impressed with what Nike has been doing. Been very impressed on some of the restaurants who've adapted, not just with takeout, but with meal kits. Pick up the ingredients all pre-done, and you cook it at home. BC has extended, of course, for restaurants to be able to sell alcohol at wholesale prices, basically the same price you can get at a beer and wine store. At least until, I believe they've done that until October, but it may be extended or made permanent. Just new ways of creating revenue. And we've also seen on the restaurant fronts, many of them not even reopening, at the limited capacity, as they're able to operate with more limited staff and more profitably, just doing the takeout and the meal kit kind of front. So we're really going to be looking for the industries or for the companies that are reinventing themselves, being innovative, or even, as I said, new industries or disruptors to an industry who will come in with a new way of doing something, a more efficient way of doing things, and see a lot higher growth. So that's kind of what we saw in June. As I mentioned, pretty flat for the month, a lot of ups and downs, but I think that was just foreshadowing what we're going to see into July. But I've mentioned this since pretty much early May, that we did have that rally pretty quick, much on government stimulus, but there is an end to government stimulus. Even if we have a round two, it may very likely not be as generous as number one, and we're going to see some of that fallout start to happen now. So keep that in mind, but do stay positive. Like I said, I see this as a great opportunity. In our portfolios, we still have a lot of cash to take advantage of these things. We've had some great run-ups in the positions we do have, and we'll be taking opportunities to take profits out of those and move it into some of those new areas we're seeing high growth in. So do stay in touch with us. We'll keep you informed on all these things. I thank everyone who's on here. We've really enjoyed doing these, and we're going to continue to do them. Reach out to us with any questions or anything you'd like to share. And as always, we are working. We're actually in the office today, which is new. We're slowly starting to come back into the office, although in a limited capacity. Of course, the company is a limited number of people that can be in the office at any one time, just to keep social distancing. But we are going to be back in the office a couple of days a week, probably for the summer, and see how that goes. But stay safe out there. Try to enjoy some sunshine if you get it. If you're in an area that you have sunshine, I'm very jealous. We got 2 or 3 days. I think we're going back into rain here again. But I look forward to talking to you all next week. And yeah, keep in touch with anything you might have. Thanks very much, and we'll talk to you again soon.